So step 9 of the loan process. So now that we've gotten those initial loan disclosures signed and back in, we're ready to move on to a very important step, the appraisal report. So I'm going to discuss with you what the appraisal report is, and in addition to that, I'll talk a little bit about the home inspection. Those are two totally different things, and only one is necessary for your loan. However, both are highly recommended. So the appraisal report is ordered the moment that your intent to proceed has been signed on your initial loan disclosures. In some circumstances, we can order that sooner depending on the situation. However, it's very important that that intent is in so that we can go ahead and get that appraisal report ordered. The appraisal report is specifically for the value of the property. So us as a lender are lending you quite a substantial amount of money. And in doing so, we want to make sure that we're lending you the money based on a property that is worth what they're stating that it is worth. So the appraiser goes out there and it is their primary job to determine the size of the home, the area, the community, the condition of the property, and what the value is. Now keep in mind, an appraiser is a human being. They're not a robot, they're not online, they're not digital, they're an actual human being. So it will be their opinion of the value. However, it's their opinion based on facts. So they're going to let us know what the value is. So let's say, for instance, that you're in contract and you're purchasing this home for $550,000. And let's say Mr. Appraiser goes out to the property, and after his determination, he goes out to the property, and within about 3 or 4 days after he goes to the property, he sends us the report. Let's say we get the report back, and at that time, it says that the value is $470,000. We have a challenge, right? Because you're purchasing it for a much higher amount. At that time, it is the responsibility of yourself, your real estate agent, and the listing agent to all come together and renegotiate. However, in some circumstances, because the appraiser is a human being and it is their opinion of value, if that listing agent or the buyer's agent or even you feel that the appraiser didn't use specific comparables or similar homes that had sold in their appraisal report, and you feel that the value is higher, we can at that time submit a written request to the appraiser stating why we feel they should have used these specific comparables, and they can do what's called a reconsideration of value. Once that reconsideration of value comes back, let's say it comes back exactly the same, we still need to come back to Plan A and renegotiate that value. Otherwise, you have the opportunity to pay the difference in whatever the value is. But us as lenders will not lend you money based on the appraised value or sales price any longer. You can still pay the sales price, but we're going to do our loan on the lower of the two, the sales price or the appraised value. So that will definitely impact how much money you need to bring to the table out at closing. So that's an important thing for us to discuss together. Now let's say on the opposite spectrum that the appraisal report comes in, you're purchasing the home for $550,000 and the appraisal report comes in at $600,000. What do you think happens then? Nothing. We all celebrate and we're super excited because you walked into that home with equity the day of closing. There is nothing that changes. Your contract remains the same, your loan remains the same, and nothing changes whatsoever. Now let's move on to the home inspection report. So the home inspection report is completely different. It's not mandated. You do not have to do it, but it's highly recommended because that home inspector's job is to look for any problem with the property. Now, as you can imagine, if you're buying a house that's already been lived in, it's not going to be perfect. There's going to be little things that the home inspector will point out, and that's okay. However, you definitely want to look for those major issues. When those major issues come up, it protects you. Once you get that home inspection report, you can discuss with your real estate agent on what you would like to request that the seller actually repairs on the property. So when they submit that request for repairs, it can be major items, minor items, it can be whatever you choose. But the realtor will definitely guide you on what you should be requesting. Now I'm going to float back to the appraisal report because I mentioned that the appraiser's primary focus was just to determine the value. However, the appraiser does have a secondary focus, and that is to determine if there are any health or safety issues evident to the eye. So if they see something, and let's just say they're walking up to the house and there's a major cracked window, that's a safety concern. So that appraiser will notate any health or safety issues that need to be repaired, and those are appraisal required repairs. So when you do your request for repairs, you can have one for the home inspection and one for the appraisal report. Some realtors like to wait until they have both and they will request all in one. That is completely up to the realtor and the guidance that they provide for you. So we want to make sure that we're doing everything effectively and we're reviewing the appraisal report and the home inspection. Hopefully that helped a bit.